Hello friends, Vladimir here, and this is the weekly review for the second week of June. We're on 9th of June 2013, and it's time to be prepared for the week coming. So the previous week was one of the very interesting weeks we had on the last period. And the reason for that was because the last week started very quiet, very calm. We saw many zigzags, and you can see that many on the majors. That's the euro dollar, for example, at the beginning of the week, right? We are on the third. Here, you see, started from the third and up, down, up, down, up, down, up, down, all the range until Thursday. And on Thursday, bam, we saw an up move that started to on every major we see, pound, dollar, and everything you can imagine, and even the dollar yen started a sudden drop down, and that was fast. That was very fast one. Now the biggest question is, what's next? So fundamentally, let's try to understand what's going around. The non-farm payrolls, that was the main event that everyone was waiting for upcoming week, except that nothing too special happened. The non-farm payrolls keep showing better numbers. You know my opinion. I still have some suspicious feeling, and maybe I'm very wrong here, but I still have some suspicious opinion about the last number of the calculations. But from the last period, only time will tell if everything was correct. But how I see the things, that the market is improving, but very limited, and the reason for that, as you can see here on last let's say the last week, okay, that was a non-farm payrolls. 175,000 new jobs were added to the market, but the unemployment rate raised back to 7.6. We saw a dramatical return on the yen pairs and on the indices during Friday, and the reason for that is because right now, most likely everyone understands that Bernanke will most likely not going to stop his purchases. Maybe to cut that. It will not happen on the majority opinion before September or even October. But if the numbers will keep showing this result, I think that Bernanke, before he leaves on the next January his job, he might surprise everyone. And if the numbers will keep showing very small growth, then Bernanke might surprise everyone and even push more and buy more. Don't be surprised if he will do that at the end. Bernanke said on last meeting, not the current one, on last federal meeting, that the Federal Reserve is ready to cut the purchases, the quantitative easings, if and when they will feel that the market is ready for it. But, and here is the biggest but, they're ready to push more money if the market will show signs for that. So, after the current retrace on the yen pairs and on the indices, it will be very interesting to understand what's going around. I will share my opinion, but let's first of all start with some other pairs. I would like to start with the Euro Australian and actually the Australian pairs. Well, I admit I was wrong about the timing on shorting that. I was sure that right from here we are ready on the previous week. If you remember my words, we are ready to go to the downside. I still keep my bearish opinion, exactly as with the yens. I remind you on the dollar yen, when it was right here, I also told you I believe right from here actually, the higher we go, the stronger we will see down. And during the last 3 weeks we saw almost 800 points drop down, which is pretty dramatical, I would say. The same in my point of view is going to happen on the Australian pairs. The Euro Australian is the first one to pay attention to. And I will try to separate my views. First of all, that's a weekly head and shoulders. After it was broken and retested, we got an up move. Right now, this head, right, which is 1,000 points, is almost complicated. Well, we can even say complicated. Now, completed, sorry, not complicated. Now we can see that on a weekly chart, this is also a Bollinger Band duplication after the break, and this is pretty stiff resistance area. Now there is a secret number 3 rule based on the weekly chart. This was the resistance number 1. This was the I was thinking this was resistance number 2, but it apparently seems that this is resistance number 2. In my opinion, and again, maybe my timing is not that correct, but in my opinion, this is resistance number 3. I think we will first of all see a push back down, and this push back down could be 300 points up to 1,000 points or something like that. You see, between the first and the second resistances, and then I do expect it to rise higher. Watching on the weekly chart, we can see that RSI is playing around the top. Only time, not only, but the last time it happened was here on 2008. We all remember what happened then. There was a sudden break, it flied up like crazy and then dropped all the way and even much lower. Last time before that it was around 80, was every time here when it made sudden drop down right after that. So in my opinion, we are coming to the top there, and the fact that the daily chart keeps its continuing divergence, as you can see right here, and RSI is playing around the top, is showing that the bulls are getting ready to get out of the pair. Now, few interesting pairs. First of all, there is kind of channel here that was broken, right? As we can see here. This I don't know if we can call it a channel because we don't have enough spots, but if it does, it means it can go for duplication. Duplication means it can still rise a bit higher on this range, as you can see, but then a deep move back could happen and could come easily. Again, I'm not convinced about this channel, as the numbers are too small, but watching on I go now for a bigger time frame. Watching on a monthly chart, we can see clear picture. After a strong drop down and a beautiful continuing divergence, we're most likely moving up, and most likely after pullbacks will continue higher. So in my point of view, if you had chance to watch my blog during the next month or two, or I don't know how long it will take exactly, but we can see around this range, we can see pullback inside here. It will try to take us back to, in my opinion, 135. It could take us back to 130 as well, which is the 20 MA on the monthly chart, and right from there I expect it to push all the way up again. And this is my opinion based on the monthly chart. Again, watching on weekly and daily. Weekly is almost 80, okay. If I take a look on the average true range channel, we are well away of the daily, and we are now way away of the weekly. This is pretty impressive range, which means from here most likely we will see pullbacks inside, and then yes, I expect Euro Aussie to continue higher. So what I suggest, for those of you who joined me, for example, on the sale on the previous week, with the next candle patterns, and we can see double spike here. Right? That's not inverted hammers, but that's double spike, and RSI again on the top. We might see here on the next days, during the current week or the next week, creating some top here, creating some patterns, starting the correction to the downside. Then most likely we'll be looking to create some bullish hidden divergences, and then should switch these sales, which we have one here from previous week. We could go and increase soon, enjoy the cycle down, then right from here switch it to the buys or hedge it by the buys. It's up to you. I prefer to slowly switch or hedge and then switch to have more buys than sells, enjoying from the long run after that, after pullbacks, long ride to come right after that for this period, for this pair. I have same opinion about the pound Aussie, also pretty much same story. I was expecting here to make the drop down. Instead of that, it was pushing up again with way over the 20 candles ride, which is pretty impressive. And we have RSI dancing 3 times around the top. Now MACD is creating an extreme again with the RSI. With the next candle pattern, we are going to get, most likely we will see a drop down. The drop down could be 400 points, the drop down could be 1000 points. That's also very possibly to happen suddenly. We still have a trend line here which never was tested. We can see a sudden drop down here, and that's 1000 points. I'm doubtful we will, but definitely we could. And again, based on the monthly chart, we have now pretty dramatical break, and yes, I expect this pair to start pushing to the upside. That was a wedge. Okay, that's a wedge or a channel being broken. So at the end, I think this is the beginning of the up move. I think that for the very long run, we will see this trend line being retested again, and that means we have pretty fat move to expect during the next period, during the next year. Of course, nothing is moving without a cycle, and the yen pairs is a good live example for that, especially the Aussie yen, which I will talk about later. So we could expect it after a pullback down, which could happen any moment, right from here, from 165, from 167, could start correction to the downside, push it up again. Same story as the Euro Aussie. RSI is on the weekly chart is almost 80, almost on the extreme. Last time it happened was on 2008. Same story. We all remember what followed right after that. Before that, it happened in 2004. You see that every time RSI of weekly was around 80, we got tops. It happened even here on this rise. You see, even here, one, we got a drop down of almost 2,000 points. Two, we got a drop down of almost 2,000 points. Three, and that started the correction totally. Now I don't think it will over so fast, this up move. I think it's just the beginning of the next up move, but I think first of all deep correction, then with daily bullish divergences will be formed. We'll be watching to switch it to the upside. So that's my opinion about the Aussie crosses. Yes, I was wrong with the timing. I was wrong on the previous week, but I still on the same opinion. This is like an investment here to enjoy the cycle to come, and nothing is moving without cycles. Remember that. So the only way to trade it is just to be prepared for that, and trade very conservative, the smallest risk you can do. Enjoy the cycles, enjoy pretty impressive move, and then switch it to the ups and hold the ups for the long run, enjoying this ride up. Now that's my opinion about the pound against the Aussie and the euro against the Aussie. Another Aussie pair, that's the Aussie Kiwi. I was talking about that for a few weeks now. You know my opinion, it's not changed. It seems like it will try to create a head and shoulders here. I still think the rise up back to 120, 160, up to 123 range is going to come. Then I think it will stop, and this pair will turn down again, and based on the monthly chart will take us, that's what I would expect, correction, if not the current month, and on the next 1 to 3 months, we'll try to push it a bit higher, and then start another drop down that I think will take us back to 112, maybe even 110 for the long run to come. This is my opinion about the Euro Aussie. So far, I keep a bullish opinion, and if it will go lower now, we have the daily divergence to continue. Then we can go and look for opportunities to add some buy around this range, enjoying the pullback then, which will be bigger, and then a drop down. Anyway, after the pullback to come, I expect it to make a down move. The next opportunity, well, on the Aussie pairs, we can talk and go. We can go and talk about the Aussie dollar, for example, which is pretty impressive. And right now, is building a monster divergence. I wouldn't deal with that as long as it does not create a clear bullish candle pattern on a daily chart. Pay attention that weekly chart is coming to extreme as well. Okay, extreme here. So we are under a very impressive down move. We might go and see pullbacks now or the next weeks to come, and then yes, I think Australian pairs will continue to the downside, because based on the monthly chart, I think we will see this Bollinger Band duplication, which means we might go and see it again around 0.86, 0.88, maybe even lower. So every pullback, deep pullback that we will have, it will be opportunity for sell. Sorry, we have now 1, 2, 3, 4, fifth wave coming. It should go and make a stop somewhere around this range, create a bottom. Then we will have 1, 2, 3 most likely, like A, B, C, and then from somewhere from this range, push to the downside once again. Time will tell exactly how it's going to act. That's my opinion about the Australian pairs. Now, one of the best investments I can do for the Australian is the Australian against the Japanese yen. This is pretty impressive. First of all, the weekly chart. After the 20 candles ride, we got a drop down, bend to bend move completed. Perfect. But now it is forming a bullish hidden divergence, which is an amazing sign. Do I think it can go lower? Yes. It can still push to 88. It can still push to 86. It can still push to 84. Every one of these levels will be opportunity to increase buys. After this hammer, I would start the buys already. Like investment for Aussie yen, you get swaps, you gain swap. This is one of the best to hold for long run, for several months, to enjoy this bottom will be created and the rise up once again. So in my opinion, Aussie is a really good one to start and hold. The next pairs I would like to talk will be the majors: Euro Aussie, Euro dollar, and the pound dollar. I think personally that after the euro dollar broke the resistance and the trend line it had, it could go and create one or between 1 to 3 candles flag here, break it up and continue higher. It could go and reach again the 133.50. It could go and reach again the 134.50. But I think the euro dollar rise will be limited. Remember, Draghi cannot allow themselves strong euro. The higher, the worse. There is one thing that I still pay attention to, and this is this head and shoulders. Remember, inverted head and shoulders, shoulder, head, shoulder. It was broken. It was retesting that, and now after this retest, it might go to make a rise. Right now, I wouldn't trust it too much, but I would definitely look and look for buy opportunities. With the protection below the 200 moving average, it seems that the euro dollar could provide a very nice rise here, and the 130, actually the 200 moving average and the 130 support will be the level of the support. Breaking below would open the doors for the bears. As long as it holds above, I would expect other buys. Same with the pound dollar. I admit I didn't see that coming. I did not see that coming. I was looking for a stop here with a hidden divergence, which actually was creating. But then, bam, on one day it was flying up without any expectation, creating a bullish convergence. And now, I think every push down is an opportunity to buy. Now, going to the 4-hour chart, pound dollar, as you can see, is creating here something very interesting. It's holding this broken trend line. It has over 20 candles rise, so theoretically it could and should close the gaps. Now that's how it could do that. Still play and hold here until the Bollinger Bands close. It can rise first of all right at the beginning of the week and then start the down move to close the Bollinger Bands. And I would actually say that as long as the pound dollar will hold above 154 70, 154 50 even, this is pretty bullish trend, and that's the one I would going and looking. If it will break below 154.50 again, we'll be careful. But I think right now this could be 1, 2, 3 candles, also flag like the euro dollar, and then should break it up, and it could continue up again. Next levels to the pound dollar will be 158, then the next one 158.70, 159, and the final one I see that right now is 160, psychological 160. Do I think it will go all the way for new highs? No, I actually don't. I don't think it will happen, because as we know, Britain also just started to recover, so and show better numbers, and they just avoided recession, which means the negative growth three quarters in a row. They avoided it on the last time, but a very strong pound can ruin that, and I don't think they can allow that to happen. The only one that is very happy with the current drop and the US dollar is Bernanke. That's what he was trying to reach, and it's good for America right now to have a weak dollar, so it works to their arms as for now. So this is my opinion about the majors. Now, how I think it will affect the euro pound, I admit I have no idea right now. I think euro pound is still able to make the down move right from here back to 0.83 or so. I think that will be the end, and I think if we get a drop down right now, that it's going to be limited here, and right from here somewhere I expect the euro pound to start another push up and go to new highs again. That's my opinion for long run, but again, right now I'm confused. I cannot recommend on anything to do on these pairs. Now, what about the yen pairs? Dollar yen, after over than 20 candles rise, started a down move. Aussie yen completed this one. Dollar yen still did not. After the impressive pullback on Friday, I still think that the down move will be continued, but and I personally think, right, the current levels and the lower levels, if they will be reached, these are perfect levels to buy the dollar yen for the long run. Why? I remind you, based on monthly chart, there is a bullish convergence between these two highs, That's a pretty impressive bullish convergence. Every pullback, that could be to 95 again, that could be to 94, that could be 92, that could be to 90. Every pullback here is an opportunity to buy and increase buys and to hold it for longer run. I think that the dollar yen will take us all the way again to 110, 111, following this trend line here. That's the levels actually through the spikes. Here we go. Okay, that's the level I am talking about, maybe even higher. That's where I think it should take us. 110 psychological, maybe even higher. That's where I think it is going after that. So right now, watching on a daily chart, we have a bearish convergence. So we should be looking to sell the rallies. Every rally here, that could be back to 98.50. That could be back to 99.80 or 100. That could be back to even 101. Every rally here should be an opportunity to sell. I think dollar yen is able to push lower, and that's what we should be looking to make. That's my opinion as for now. But again, I think every low it will create will be an opportunity to increase buys and to hold it for the long run. Now pay attention that this week there will be current account released on Japan. That will be tomorrow on Sunday. And then on Tuesday we have press conference, and actually before that we had a monetary policy statement released on Monday. That could be very, very interesting. From Japan, again, as I said, technically I expect to sell the rally. I expect it to go a bit lower and then just an opportunity to increase buys, but stay tuned, or the fundamental things, they might change the game, and they might change the technical analysis and the technical expectation. The euro yen and the pound yen, as far as I see, they could go now and create a head and shoulders on daily chart. We had a head, we now had we had a shoulder, we now have a head. We might go again to create a shoulder. That means it could take us back to 130, 131 to increase the shoulders here, and I think there is more of them to go. Exactly like the other yen pairs, I think this one could still drop to 124, 120 range. Again, the lower, the stronger the buy to come after that with the current bullish convergence it has. I think the lower, the better the buy. For longer run, I think euro yen will be again 138, 140. Who knows, maybe 150 again. So every pullback down is an opportunity to increase buys for the longer run. Where is the pound yen? Pretty much same story. I expected to create a head and shoulders, but again, we have to follow the fundamental things to come this week, because they might change the expectations. Every drop lower could go and create an opportunity, a better opportunity to buy with the bullish divergences on a weekly chart. And watching on a monthly chart, I think it has more to go. It had a beautiful wedge. I think also bullish divergence. I think this is resistance number 1, the current one resistance number 2. I think it's able to take us all the way back to 180 for the longer run, at least. So every drop is an opportunity to increase buys. This is how I see the things. And the last one I have on my list, this is the euro franc with the current bullish hidden divergence. I think this is a good opportunity to buy right from here, actually, or every pullback lower to 123.30 or something like that. Of course, if it goes even lower, that's opportunity to increase more, as long as the Swiss government holds their intervention. And I think that Euro Swiss should continue again to the upside. It was above 126 already, one or 2 weeks ago, something like that. So I would not be surprised if it will try to reach that again. So in my point of view, look to buy this pairs. Dollar ZAR, I've been talking about this pair. One of the best pairs to buy and to hold for the very, very long run, to enjoy the swap. It pays very, very, very well, and it doesn't mean it could not rise to 1060 again, or even to 11. It could, and for me it will be just opportunity to increase more, because such opportunity is very, very rare, and the higher, the stronger the sell should be. Enjoy the swap, enjoy the cycle to come after that. A rare opportunity to gain some very, very, very nice percentage. Same opinion I have about the dollar against the Turkish. I think we are going all the way to the downside. You see what we have here. So I think it could push up a bit and drop down again. Great opportunities in my point of view. And a few words about the gold and the silver and the indices. Gold, I think, as I said not once, still could go lower, something to like 1280, 1250 range, maybe even a bit lower. It has a wonderful continuing divergence forming. RSI is playing around a bottom on a weekly chart. the lower it goes, the better the buy will be, because we have a bullish hidden divergence on a monthly chart already. It could take us back to this trend line, and that's pretty much the same levels. It could even take us to this line, and that's even a bit lower. That's a bullish hidden divergence forming with the weekly continuing divergence. It forms a strong up move will come right after that, in my opinion, back to this trend line. So something like that, down to here or to here, to this range, and then all the way up again. And this is my opinion. For the silver, same story. It is dancing around the bottom. In 5 more weeks, if it will play around this range, it will create a continuing divergence at 20 candles right on a weekly chart. Perfect. What else could I say? On a monthly chart, of course, bullish hidden divergence forming already. Every low is opportunity to have a buy. Wait with a buy right now. It still could go and play here to create a beautiful bottom, and then with candle patterns to be time to attack. What's my opinion about the indices? Well, you know what I think about the indices. The higher it goes, the stronger the down move will happen right after that. I am not convinced that the bottom was created already. We do not have any convergence. We could, the top, sorry, created already. We could still go and create another high or something, or at least try that. But as I said, the higher, the worse it actually is. Not better. It doesn't get better with every new high it creates, and that's relevant for all the indices. The higher, the stronger the down will come after that. And I hope it will drop first of all right from here. I hope this correction will come now and not after the summer or during the summer, because the stronger this rally actually is on the weekly chart, then the more powerful the downtrend that will come after that will be. And I remind you, the monthly chart is topping, very topping. The current scenario is bad, something not good is about to happen, but it will take time. And according to the yen pairs, it still could rise. It has correlation right now with the yen pair, so will not be surprised if they both will create new highs, smaller highs, or will first of all complete deeper correction to the downside before continue and rise again. That's all, friends. This is my opinion for this week. That's my trades to follow. Again, keep it very, very, very conservative. Don't take big risks. It's not necessary. We have great long-term opportunities right now. Do not be afraid of being in a minus for some time while you hold a trade. Watching on long-term charts, we know how pairs move. We know how cycle comes. Dollar yen is the best proof for that right now. Thank you very much for watching this video. I wish you wonderful and successful trading. Yours, Vladimir Ribakov.